What's up, YouTube family? Welcome back to another episode of Market Grinders. Thank you guys for tuning in this week. Please make sure you guys like, subscribe, hit that notification bell so you guys can get the video as soon as we post them. First thing, guys, please want to say Happy Father's Day to all the fathers out there. Continue to follow us, guys. We're gonna work together, try to build wealth together. Okay, so today, guys, we're just gonna have a good information that we're gonna run across, and we just want to make sure you guys are clear about what we believe is going on with the red days that we done had for the last 2 weeks. I know everybody was excited. A couple weeks ago, all we saw was green, 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 but you know the market is unpredictable. So we want to make sure you guys are clear about what's going on with the red, how long we think it's gonna last, and what you guys maybe should be trying to get into. We had a couple of I had a couple family members asking me what we would do with a little bit of money right now. So we're gonna just go through a couple questions and we're gonna answer them together for you guys today. Okay. So first question, we just want to say, so what you think is going on with the red days? I know we had those couple of good days of green, and everybody thought it was over with, but then we got another week of red days. So what's going on with that?
I mean, of course, I don't control the markets,
Yeah.
but what happens with the red days is people are selling. When the market is red, people are selling. Market is green, people are buying. It's that simple. And right now, we got a lot going on. I think Friday, today, Saturday. Happy Juneteenth, by the way.
Juneteenth, everybody.
So Friday, the Feds came out with some inflation news that kind of spooked the market as well. So when the inflation happens, people start to look for other places to put their money other than the market where they can get a better return. And that's some of the bigger guys. So when the bigger guys start moving money around, the market starts to go down. But we just got to look at that as an opportunity. When you see the market going down, we got to take opportunity and start buying into certain stock. So right now, if you've been with us for a while, you should understand growth stock versus value stock. We've been in an area where growth was where everybody wanted to be because you get the biggest bang for your buck in growth. But we're starting to cycle back into value. And another thing to think about when you start thinking about inflation, and the Fed's talking about things being overly inflated. Normally, historically, tech has been a great place to be when we're in when we have these inflationary fears. So places like Apple, places like Tesla, Microsoft, those are good, solid companies, and they're great places to have your money. When we're the overall market's kind of afraid that inflation is going to take over. Another thing that we should think about when we're building out our portfolio is, and again, if you've been following us, being diversity. Having a couple shares of growth as well as some core share of value. So that way, when your growth stock run up and the market starts to cycle out of growth into value, you can start taking some of your money out of the growth and putting value as your growth stocks start to decrease in price. And then once they get to a certain buy level, then you start purchasing more of your value stock and let your money run back up again, and then trim the top, take that money, put it back in value. That way, red days, green days, it doesn't matter. Your portfolio will still be doing well. And then mindset. Of course, if you're expecting to, make $1 million in 2 weeks, and the market went down this week, you're upset. But if your goal is long term, you understand that this is a buying opportunity for me to buy it cheaper and buy it cheaper in growth and hold it longer in value. So, for instance, what I'm saying is, a NIO, for instance, NIO's been doing fairly well. So if you've been purchasing NIO over the while, really you should be up. So you should take some of that money as if NIO starts to sell off, and roll some of that money into an Apple, into a Microsoft, into a Tesla, and let that money continue to run up as NIO sells off. Find your new entry point price in NIO, then purchase more stock when NIO drops to that price. and just rinse and repeat. It's not hard. You just rinse and repeat and do the same thing over continuously, and your portfolio, it'll continue to grow. Just to give an analogy, you just think about, planting a seed. You take the time, you plant the seed in the dirt. That seed grows into a fruit. The fruit falls from the tree, or the seed actually grows into a tree. The tree bears fruit. That fruit falls to the ground, and then the seed from the fruit replants itself, and it grows another tree. So that's the same thing, value and growth. You're planting your money in value, it grows. You take the money off the top. That's the new seed that now you plant back into value, and now you continue to watch your value stock bear fruit, and then you eat forever that way. So just having that mindset helps when it comes to some of the red days in the market versus the green days in the market.
Yeah, that's good information. Also, guys, just want to make sure red days is always good. Not always good, but I take them as an opportunity to fill out some of my positions. A lot of time when the stock is up and you're trying to get over 100 shares of these particular stocks, this would be a great time for you guys to average cost and to get those at a cheaper price. So that way you guys can get those positions filled out. You always want to try to get over 100 shares, as much as you can, anything over 100. So that way you can always, if you're fine with the stock, you feel it's gonna grow over a period of time, that way you can take some profit out, and then you can still have a position in the market. So if it goes up, then you're not missing out. Instead of taking all, just selling off all of your profit and then just taking it and then having nothing to do with the money besides investing it into another stock or so. So definitely a good time to fill out some of those positions. It's some great value stocks out there now, great growth stocks out there now. So you guys can definitely fill those positions out and then be better off in the long term. So it'll be a good opportunity to do that at this moment, especially next week. Because we don't know how long these red days is going to last, because, the market is unpredictable. So at the end of the day, you want to try to get this stuff as soon as you can, because just 2 weeks ago it was green, and we try to you want to buy something on the pullback. So just want to make sure you guys are in tune with that. All right. So any suggestions of what you would get if you had your portfolio? You had about $1,000. Any ideas what you would probably want to get into while these red days are going on, which is a perfect time to get into the market at this moment. So any ideas?
Well, everybody has their own marketing strategy, and that's the first thing before you even put a dime in.
Yeah.
Know what your strategy is, right?
Yeah.
So what are you trying to accomplish with? You said $1,000.
$1,000.
So what are you trying to accomplish with $1,000? So I wouldn't give you, and I'm not giving financial advice right now.
Yeah.
But the first thing is understand, what do you want to accomplish? Do you want to turn your 1,000 into 2,000 in a week or 2 weeks?
Mm-hmm.
Is that your goal? Or do you want to start establishing positions so that you continue to add for long-term growth?
Yep.
So if you were wanting to go the long-term growth route, like starting your value portion of your portfolio up, I would purchase stuff, like I said, I would purchase stuff like Microsoft. I would purchase stuff like Apple. I'll pick up on Tesla, while it's down, around in the 600 mark, and hope and routes to it going up to around 900. Now, but when you go that route, you got to know what you're investing long term. You're not, you don't sit back, all anxious waiting to pull your money out next week if Tesla moves up $1 or $2. You know what I mean? Yeah. And don't pull your hair out if Tesla falls down $1 or $2, because that's going to happen. So that's one route that you could look at. But if you're just looking at like a quick flip, I want to make some quick money, I would think about options. Right now with AMC, with what's going on with them, like that's an easy, if you've been following us and understand how to play options, that's an easy way to take $1,000 and get in and make you $300 to $400 every week off of your $1,000. By buying call options. I would stay away from put options with AMC, but I think call options are a great way to play AMC. Another thing if you just wanted to go build out the value portion of your portfolio, the XLE, which is a energy ETF. we're getting a lot of movement and energy. We're actually high. I think we in the last three months we probably gone from around $29 to $50 a share. But I still think there's some room there. So I'll wait for a slight pullback and might grab an ETF there in energy. That way you get a bundle of stock that that you don't have to go and pick these individuals. Same thing with consumable goods, a ETF in consumable goods where you can kind of capitalize on that. Right now it's Christmas. It's not Christmas, but I would be thinking about Christmas at this point, because the thing about stocks, you don't want to go where the money is. You want to be where the money's coming.
Yep.
So we know Christmas is probably the next biggest holiday that's coming.
Yep.
So where's the money coming for Christmas? The money's coming in the retail section.
Yep.
So you could find a good retail ETF. You can find a good retail company that you believe in, but no, buying it now, you may have to ride it down. So I would just do my research and I would just watch it, and I would set a entry point. Like if it's Gap, if it's Kohl's, if it's Target, if it's Walmart, shipping gets very big during Christmas time. So just wait for a pullback in that. Set your $1,000 there and just ride it out through the Christmas season. Don't worry about it. So that's how I would think about $1,000 in the market. But the first thing that you have to do, you have to think about it and think about what you want your outcome to be and have a strategy. Don't just throw your money in something and cross your fingers, because that's not investing. That's really gambling, and that's not what we're trying to promote. That's not what we're trying to teach. And if you wanna gamble, man, take 1,000 to the casino, put it all on black.
Yeah.
One spin and see what you get. Maybe you double your money in 30 seconds. But
Yep.
that would be my take on $1,000.
That's good information, man, because there was a question about what someone would do with $1,000, and there's many things that you guys can do with $1,000, but that's just some of it. Definitely continue to do the research, because there's definitely opportunities. Call options are great. $1,000 call option on something, and if you see a pattern over a week or so, it going up and down, the pattern is there for you. So you can just look at the pattern and then put the money there, and then watch it ride up. But you got to make sure that you're watching it so you can get out, because just as fast as it go, it can go down. But thank you guys for tuning in today, guys. Like, subscribe, hit that notification bell, and happy Father's Day to all you great dads out there. So thanks for tuning in. Keep grinding.
Peace.